gooped around a little bit. That's usually that's like the norm for like big gap up days. I mean, going through like, my own stuff, like there is no history like of like anybody making money on, big gap up days. The only play you can do on big gap up days is hit the first dip, into the EMAs, and then you're like kind of sitting pretty, like so you got to kind of hit these first ones, and then you're really kind of sitting around a good chunk of the day. That's the nature of all gap up days. When you get this, like you get that first dip, and then really the rest of the day you're kind of grinding your balls off. And then it becomes a little, game of patty cake where it's like, everything looks like it's busted, and you're like, am I buying too high? Am I buying too low? And you can end up being it. So today will be a little bit different because we're getting, essentially the same size, but gap down. Gap down days, I find, are a little bit easier just because you have like a more rapid deterioration of the tape that can happen. This is still a pretty big gap. Like, it's going to be hard to chase anything up at the open. If you look at the underlying structure, of the markets, we still got in like this kind of rollover mode. Yes, we did have like a big day in the Qs yesterday, but it was like a gap and grind day. But we're kind of nuzzled into some resistance here. So we'll have to see this is going to be a little bit tricky. We have, number one, like all this damn strength yesterday. And it was like a big day. I mean, you saw names like move in like 60, 70, 80 points into the close. But, that could have just been like a big FU to kind of throw everybody off the mark. So now you're kind of giving back some of these gains here. But most of the stocks are like just kind of nuzzled right up back into the 9 EMAs. And so, really till they break over those, they're still guilty till proven innocent. So we're nudged right against the resistance spots on most of the individual stocks. And then you also have, right, the market itself kind of gapped and grinded right into resistance. Today is going to be, I would say, probably a little bit of a clusterfuck. You can't chase down the open. Most likely you got to do we're going to have to pull a little bit at the open. The overall structure is still, right, like lower high, lower high, lower high, lower high, lower high. Even though we've had like these really big up days, the biggest up days always happen in the teeth of bear markets. Let's take a look and see if there's any earnings plays that, there have been good news plays happening both to the long and short side. You're even seeing, I would say, a little bit of a return of some of the like speculative trading. You have some of these things like, ASTS and that were taken off yesterday. But let's just take a look at the earnings plays. Then we'll kind of go into our market-specific plays and the game plan for that. You are seeing a pop in some of these. You are seeing a pop in some of these oil names. Most likely like something like this. Even though it's pulled back to the 9 EMA. When you have like that big of a collapse, like all these subsequent pops they're like dead cat bounces at that point. This is different than like some kind of trend trade. I wouldn't chase this thing up on a 25% gap. Like, you could put it on your watch list, and if it starts to marinate or something, I mean, you could do it. God, I mean, to try to dead cat bounce this, is even worse than the person that was playing it, the primary way. That's a recipe to get smoked out. LGVN pass. So you can see all these like little oil stocks are going. These are all going to be dead cat bounces. Like something like this, like you may get some steam if you come out of the zone over here. It trades really thin. There's like a monster cock spread on it. I'd rather slam my dick in the drawer. Husa, I noticed, trades the cleanest out of them. It's got the least amount of spread and like kind of the best mix of, I would say, liquidity and ATR on it. If you need to do one, then I would go with that one. Let's take a look and see what else is going on. Crowd had earnings out. Crowd sees powerful tailwinds driving fiscal 2023 full year-end sales. Blah blah blah. Da, 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 da. This strikes kind of two chords. Number one is Crowd itself is right like a security, right, like a little bit of a security company, and you've got like an earnings beat on this bad boy. This stock has actually a history of making moves for us. we've nailed this thing quite a few times. Obviously, the market conditions today are a little bit weak to possibly support like a monster breakout on this. If they had announced their earnings yesterday, this thing would have ripped probably an extra 10% even from here. On a day like today, it'll be a little bit more tricky, but this is the right sector. It's the right time. I think we give this thing a gander, add it to our earnings playlist. Let's see if this thing pulls our ORBs at the open. We may get a little gander on this. USAG, this is another one. Like all these little guys are probably going to be in play at some point. We don't know how nasty oil, if oil gets like a big bounce today or not, but you could probably add a couple of these if you really want to trade these. The issue is going to be like you got to gap up on oil today at 2%. But yesterday's drop was nasty. Like you could legitimately just red roll here too, and all these things roll over. So that's why I wouldn't want to really kind of chase any of these things up. When you get such a big down day and you get a gap up that's like back in the middle of the range, there's a strong possibility. Yeah, you could keep continuing on because the trend is higher, but you can also red roll down into like these ranges. I don't think it's a high probability play today to try to hit these things like after they've already collapsed. Marqueta. So this is also earnings. Marqueta loss shrinks, revenue rises. This thing, like if it gets over this 50-day moving average, kind of probably around that 12 spot, you do got a location where like it probably could start to squeeze out a little bit. It would need to get over this because we've seen this a lot. Like if you have 3 up days and you gap up into resistance, even if it's on decent news, oftentimes like right at the open, you're kerplunk right into it. It doesn't end up being, anything really fun. CYRN, turd. These are all just inverse ETFs. So, okay, so let's take a look at some of these. So you've got something like an Alcoa. Hey, Ajay, how you doing? You have something like an Alcoa. This is actually a very classic trend trade, something that, even swing traders should be learning. When you have something that's got like a big trend and you get a 3-day pullback, 3 days is like, I think the minimum for an easy pullback, that'll give you still some juice. When you get a 3-day pullback into the 20 SMA, like that's actually a really good setup. I would keep this on the list. I think that's probably going to have a little bit of juice. And I didn't read the inflation numbers, but I can only imagine they're probably pretty disgusting. You probably want to add in some US steel here because you got this flat top breakout over here, right? You pulled back into the breakout spot. This is like a very classic setup, right? So you have a breakout, pullback. And yesterday, like you did have like some pretty good strength on it. I think this is a candidate for a little red to green. I think you want to add in a CLF too. Out of all the metals ones, I add these two because they got the most liquidity. They got like the best mix of kind of liquidity and range. There's like a million other ones out there like STLD and Nucor. I think these ones just got so much damn. When you have the liquidity and like the market sucks, you want to be able to get in and out pretty easily. I think this is also a candidate for a red to green, especially if the market tanks, the commodities start to cruise up. Both of those are going to give us a little bit of juice. And you're already seeing like Alcoa start to make a move. Chunk. These are Fang, man. Mosaic is another one, right? Like I think ag companies are going to be hot for quite some time. They've already been hot for quite some time, but this kind of stuff, this trend is probably not going away for a while. You have a nice orderly pullback into 9, a little bit of a gap up. It actually trades with pretty good range. I would keep this on the watch list too. I got all these kind of ag companies. You could, add in an IPI if you want, but that one's a little bit less on the liquidity side. Make it a lot easier to get rid of all those inverse ETFs. Yeah, if you're on your pre-market list, if you change your list of U.S. common stocks, then you'll have, you'll get rid of all the kind of inverse ETFs that show up on your gapper list of TC2000. And if you ever want to like, if you want to add in like say the ADRs, what you do is like a combo list. So like say you wanted to add in ADRs, you come in, do a combo list where it's like list. So you want to do add 2 source lists. You do US common stocks and then do ADR. So you see like you got these American deposit receipts. And then, you can add some pre-scanned conditions if you want, but you don't really need to. So you can go like that. Now you got like a whole new list here. That'll get rid of all the, so then you type in your source list, new combo list. Now you got all these ones and you can get rid of all the ADRs on it. The only thing is you do got to refresh that list every blue moon because, you're combining 2 lists, but like sometimes you'll have some new issues come out. Junk. Oh, junk. All right, let's look up. Let me change around the volume parameter just a tad. So you do have some. All right. Now this. See something like this? Like, damn. The sun's getting smoked on the earnings. Hey, so this is like, we can add this to the list. You can't chase it down for a short. It'll probably squeeze a little bit at the open because the SSR will be on it. Let's say like this thing kind of squeezes up like even like $3-4. This is probably a good rollover candidate for like an end of day fade, only if it squeezes higher, right? Like you need like either like a decent pop at the open and then it'll fizzle, or like a pop into the 920 EMA and then like it fizzles off in the afternoon. BBWs. I don't know. I don't think BBWs will have enough liquidity for us. Beaky. Beaky posts lower earnings, revenue issues, guidance. Hey, this has a pretty big breakdown. Beaky, do you love me? Do you want me? This is another one. Like you can't chase this bad boy down, but like if it spikes off at the open, $2-3, then I think you're going to be able to. I think you're going to be able to come in for this on a fade later on. Coupang. This is another big turn. I'm assuming this was based on earnings. Oh, the earnings were actually a couple days ago, so it's got something else going on. Oh, there's all these little China stocks on the watch list. Okay. These are all in play. I think you can add in all these Asianese companies. Like, see this, like JD, post higher Q4 adjusted earnings revenue. This is probably our top play here. You got a big time breakdown. This is 6 windows worthy. All right. You got a big breakdown there. Hot damn. That's the one. That's looking juicy. Add that. That's top of the list. If that ORBs does a quick pullback buy at the open, fuck, we could have taken this about an hour ago. Billy's another one. So, okay, all these China names are go downtown Julie Brown. These all, like, if you pop up or consolidate at the open, we can take these down. That Billy has a little bit low liquidity on it, but I think we can roll in with them. Data's a big tag. See this, like PDD? Man, this thing used to be like, man, remember we used to trade this thing at $200, $300. It's another one. Add in all these little China names. SC is the one that we've had the most success with, I'd say. Okay. Yeah, I think SC we've always had good luck with. Baba, PDD, these are all just bear flagging on the dailies. I mean, this will give us some good, these are going to give us some good little shredders. See this future, this is another breakdown. So you got this right downtrend, 2-day pop into 9, coming down. Whew. If you need a little bit more liquidity, this Baba, don't worry about this spike. This thing should break down those lows right there. I'd add both SC and BABA to the list. You can add in PV, PVD too if you want. Jump. All right, cool. Now let's look on the other side of things. Like, we got a lot of these stocks, like Nvidia's kind of nuzzled up against the 200 SMA, right? Big bounce into it. I think that's we probably got maybe a 210, 208 spot on this. Hey, Almond, what's going on? So you got nuzzled. So you got 2-day bounce into resistance. Now you kind of curls for the girls back down. This one will have range. Now you can't chase this down. So see like how it's down 6 points and the ATR on it is 12. So ATR means, right, average true range on the daily. So if it moves on average 12 points, it's already down 6. So ideally, like you want a little bit of a pop up at the open. Wait till it starts to marinate into, the EMAs, and then you can kind of go into it. What I mean by like wait for it to pop into the EMAs is like, if anybody's not familiar with that term, like this is kind of like how you want it to look. Like, so what happens is like when you get a stock that opens down weak, like let it pop into either the 9 or 20 EMA. When you get a red candle to hold, then you take the short, put the stop over, and then you cover into the flush. Then when it re-pops into the EMAs, get a red candle to hold, cover into the flush. And so now you're moving and shaking around, right, within that trade versus just kind of buying, shorting and holding. In a wild market, like it's very rare you can just short it and then you just kind of hold it. And it's like, you need to really be able to massage the balls on these things, right? So it's like short, cover some, short, cover some. We're day traders, right? Day trading means you are in and out and massaging these trades back and forth, and you may do it around a core position if you have a overall thesis, but like when you're gapping down so much, you can't really kind of have a core because the market hasn't really given us anything. So just something to be mindful over here. I do think today you want to really focus in on names that just have a lot of liquidity. So, you got AMD also sitting in at, yeah, I know, I'm in my marketing guys suck. Coming down, popping into the EMAs, and now you're starting to roll. So like you got a really good location on this. Keep that on range. Hey, for a potential long, all right, if oil does hold up. Yesterday, oil was down, 12%? This Oxy was squeezing out of nowhere. This Oxy, so like it opened down weak. So oil was down at the time. So if you do a comparison chart, right, oil gapped down and it was trending down the whole day. This damn Oxy, and they just announced, right, like Warren Buffett, Phoebe Buffett's older brother, had made a big investment in it. And so there might be an inherent buyer in this somewhere in it, right? There's an inherent buyer in this somewhere. So this thing like gapped down. So while oil was going down, like this thing was squeezing higher. So it's got relative strength on it. If we need a particular long and oil holds up, I think that's going to be, the play. Hey, I know the small caps have been going the last couple of days, the DRCTs and DCOX and this stuff, but if the market's going to roll over, then that market will be dead. So like you can come in on like something like DRCT. This is going to break hearts. You need, if the market rolls over, like the small cap market is the first thing that dies off. If it's risk off the table, what's more risky than this, right? So you have to be careful. Like, if the market was still staying hot, I would try even to do a red to green on like something like this, right? Like this Space Mobile, which had like a really nice end of day run. But to me, like this is probably just fool's gold on a day like today. If we roll, then nobody's going to want to be in those names, and then it becomes inherently a lot trickier. Big portion of trading is like, everybody wants to trade those little guys, but there's only a time and place to trade the little guys. So like the little guys, right, like your DRCTs, ASTSs, there's like 2-3 months of the year where they're actually tradable. The rest of the year, they just run on pumps from, right, small cap chat rooms and degenerate Discord rooms, and they're just essentially meant for you, Gary, to be the sucker that buys it, and then there's going to be somebody in the know that's selling it to you, right? Most likely some 20-something in a chat room with a fake mustache and probably a fake Rolex. That's usually how they get you. So this is probably like, we don't really need to be in these things probably today. I'd leave them alone. Like there's going to be more than enough kind of plays where you're going to have like some good range on them. All right, let's think about like top 6. I think we go Oxy, JV short. We'll keep a couple of the metals, CLF, AA. Then we've got crowd for potential long. Then I think, we go NVIDIA, AMD on the short side. And then we got the Chinas, right? So you can add in China. So you have to have like buckets, right? So when we think about like buckets or tiers, when you're making your watch list, it's stocks that are immediate, that like you think would go right away at the open. That's your tier 1. Your tier 2 is like, okay, these are like hot charts, but they may need a little bit of work. Like they have to pop up at the open. They have to consolidate. They have to do something. That's like your tier 2. And then your tier 3 is like, okay, what are like sector specific plays, like themes of stuff that I do every day. So like, for example, a big theme of the last 2 months has been shorting, shorting tech stocks, right? So that's a theme. So we have themes of, hey, AMD, SHOP, NVIDIA, right? These are like tech faders. These are like growth companies that are essentially overvalued, and we've been shorting them. So we know them, we love them, we've gotten to know them, so on and so forth. That's like your tier 3. So you always want to organize your list. What's ready now, what could be ready in 15, 20, 30 minutes, and then your daily traders. Does that make sense? Good. Last one, and this would actually be probably a tier 4, but I would keep probably a handful of solar companies, ENPH, Run, SPWR on your watch list. They look like they might just be starting like some longer term moves. If they can get into the right spot, like we'll probably be able to nail those bad boys too. If I could turn back time, what the fuck? If I could turn back time, you wouldn't find out. Let's get to work, peoples. Let's get to work. We got things to do. All right, I'll be in the boom boom room. Let's go, man. Let's go have some fun. Shit, where's my 6 window layout?